Welcome to the ultimate showdown, AI versus manual trading. If you're new to the financial markets, you're probably asking, which method will actually make me more money? We're diving deep to find out. Trading promises financial freedom, but for a beginner, the path is often confusing. You need a reliable method, but the market is full of complexities. We're here to break down the two major paths, AI automation and personal manual effort. The excitement of trading is the potential for high returns. Beginners are drawn in by the dream of quick success, but this often leads to impulsive decisions. What does it take to turn that dream into a reality? And where does AI fit in? Let's first define what we mean by AI and manual trading in this context, especially for those just starting out. Manual trading means you, the beginner, are solely responsible for analyzing the market, executing trades, and managing risk. This requires time, knowledge, and a strong mental game. The barrier to entry for manual trading is the steep learning curve. You must master technical analysis, understand market fundamentals, and develop robust risk strategies before you can consistently profit. Emotions are the downfall of many beginner manual traders. Fear and greed lead to impulsive decisions, over-leveraging, and devastating losses. Controlling human error is perhaps the biggest challenge. When executed flawlessly, manual trading offers unlimited potential returns. However, for a beginner, the high risk associated with the steep learning curve often means initial losses outweigh any gains. Now let's look at the appeal of letting technology do the heavy lifting, AI trading. AI trading, often through automated bots or simple platforms, offers ease of entry. Beginners can set up pre-programmed strategies and let the algorithm execute trades without emotional interference. A critical point for AI, it's not magic. The system is only as smart as the strategy it's programmed with. Beginners still need to learn enough to set up and monitor the bot effectively. AI bots are incredibly consistent, executing trades exactly as programmed 24/7, but they struggle with adaptability, often failing when market conditions drastically change, which is where manual insight shines. So how do these two compare when a beginner is seeking profit? Manual trading demands significant time for learning and execution. AI trading, while saving time, usually requires a greater initial capital investment in software and platforms. AI provides rules-based, emotionless risk management. Manual trading, however, is subject to the beginner's discipline, leading to higher risk exposure from emotional mistakes. For beginners focused purely on profit, the answer is nuanced, but there is a clear winner in the short term. In the short term, AI trading provides a more consistent, less risky path to small profits. But for true long-term success and the ability to adapt to any market, combining manual knowledge with automation is the most profitable strategy. Our final advice? Don't choose one or the other. Start with manual knowledge, then integrate AI. Become a smart trader, not just an automated button pusher. This is the surest path to beginner profit.